Hello everyone, welcome to the Stock Minds web channel. In an era where artificial intelligence, high-performance computing, and advanced semiconductors dominate headlines, Taiwan Semiconductor NYSE TSM stands out as a major beneficiary of accelerating demand. With its Q3 2025 report reflecting robust year-over-year growth, the company appears to be delivering not only strong performance, but also compelling value for long-term investors. In this video, we will dive into Taiwan Semiconductor's recent earnings, stock performance and valuation, growth potential, and the risks investors should consider. About Taiwan Semiconductor. Taiwan Semiconductor Manufacturing Company, TSMC, was founded in 1987 in Hsinchu, Taiwan. It was founded by Morris Chang and grew to become the world's largest dedicated, pure-play semiconductor foundry. The company provides integrated circuit manufacturing, mask services, packaging, and other foundry services. Essentially, TSMC builds chips designed by other companies, for example Apple, NVIDIA, AMD, Broadcom, using advanced process technologies. It has become a critical node in the global semiconductor supply chain and carries immense strategic importance given the rise of AI, data centers, and advanced mobile and computing devices. TSMC financial performance. In the third quarter of 2025, TSMC reported another strong financial performance, highlighting its leadership in the global semiconductor market. The company's revenue for Q3 2025 reached $32.47 billion, a substantial 35.84% increase compared to $23.9 billion in Q3 2024. Earnings per share (EPS) also rose sharply to 57 cents, up 46.15% from 39 cents in the same quarter last year, reflecting improved operational efficiency and higher margin product mix. On a trailing 12-month TTM basis, revenue stood at $119.13 billion, up 42.75% year-over-year from $83.44 billion, while EPS TTM increased 56.69% to $1.99 compared to $1.27 in Q3 2024. Meanwhile, free cash flow per share (TTM) grew by 11.88%, reaching $1.13 versus $1.01 a year earlier. Profitability metrics remained robust, with a gross profit margin of 58.98%, net profit margin of 43.29%, and free cash flow margin of 17.57%, all indicating strong operational efficiency and pricing power. TSMC's return metrics were also impressive, with return on assets of 21.37% and return on equity of 34.98%, reflecting its superior capital efficiency. Furthermore, with a debt-to-equity ratio of just 0.19, the company maintains a conservative balance sheet that provides flexibility for future growth investments. Over the past 5 years, TSMC has grown its revenue at a 23% CAGR, net income at 26%, and free cash flow at 27.4%. TSMC has been a strong compounder, as reflected in its financial performance. TSMC Fiscal 2025 Financial Forecast. Looking ahead, analysts project 2025 revenue of $123.12 billion, representing a 40.09% increase from $87.88 billion in 2024, and forecast non-GAAP EPS of $10.35, up 47.03% from $7.04 in 2024. Wall Street analyst remains bullish, with analysts assigning a buy rating and an average price target of $335.40, implying a 13.66% upside from current levels, while the highest price target estimates reach $450, suggesting a potential 52.49% upside. These results collectively highlight TSMC's exceptional growth momentum, strong profitability, and solid financial foundation heading into 2026. TSM's stock price performance and valuation. At the time this video was created, TSM stock was trading at $295.08, marking a 43.3% increase over the past 12 months, well above the S&P 500's 14% gain during the same period. Looking at a longer horizon, TSMC has generated exceptional long-term returns up 240.3% over the past 5 years, compared to the S&P 500's 91.3% increase. Despite this impressive rally, the stock continues to present a compelling investment case when analyzed through its valuation metrics. TSMC's has dividend yield of 0.77% provides a modest yet consistent return to shareholders. In terms of valuation, the stock currently trades at a price-to-sales PS ratio of 10.29 on a trailing 12-month TTM basis, with a forward PS ratio of 9.96. Its non-GAAP price-to-earnings (PE) ratio stands at 3.65 TTM, while the forward PE is 28.51. The price-to-free cash flow (PFCF) ratio of 42.96. Based on fiscal.ai data, if we look at the valuation over the past 5 years, the stock forward PS and forward PE are above the average, while the PFCF is around the average. While it may appear elevated at first glance, but this premium valuation reflects investor confidence in TSMC's dominant market position, strong cash generation, and growth prospects driven by the AI and high-performance computing boom. TSMC growth potential. TSMC growth prospect remains strong, driven by several factors. 1. Exceptional AI-driven revenue growth and market leadership. TSMC posted record-breaking financial results in Q3 2025, with revenue of $32.47 billion, up 35.84% year-over-year, surpassing analyst expectations. The company's net profits surged 39.1% to 452.3 billion new Taiwan dollars, setting a new quarterly high. This exceptional growth was driven by strong demand for artificial intelligence infrastructure chips, where high-performance computing (HPC) applications like AI training and inference contributed 57% of total revenue. Advanced process technologies under 7 nanometers accounted for 74% of wafer revenue, with 3 nanometers at 23%. 5 nanometers at 37%, and 7 nanometers at 14%. TSMC raised its 2025 revenue growth forecast to the mid-30% range, reflecting strong AI demand. CEO C.C. Wei highlighted AI chip revenue is expected to grow at over 45% CAGR from 2024 to 2029, affirming TSMC's leading role for companies like NVIDIA, Apple, AMD, and Broadcom in AI innovation. 2. Technology leadership through advanced node dominance and 2 nanometers roadmap. TSMC holds an overwhelming technological lead with about 70% global contract chip-making market share as of Q2 2025, especially dominating sub-5 nanometers process nodes, which contribute nearly 3/4 of its wafer revenue. Production of its breakthrough 2 nanometers N2 technology using gate-all-around nanosheet transistors is on schedule for the second half of 2025, promising 25 to 30% power savings and 10 to 15% higher performance over 3 nanometers chips. The roadmap includes 1.6 nanometers N2PA16 mass production by H2 2026 and 1.4 nanometers A14 by 2028, reinforcing continuous innovation cycles that increase switching costs for customers. Major players like Apple, NVIDIA, and MediaTek already secure N2 capacity, underscoring TSMC's wide economic moat, premium pricing power, and sustained margin strength, difficult for competitors like Samsung and Intel to replicate. 3. Advanced packaging capacity as critical differentiator for AI market dominance. TSMC's proprietary CoWoS, chip-on-wafer-on-substrate advanced packaging technology, is a key competitive advantage, crucial for meeting booming AI chip demand. Advanced packaging revenue nears 10% of total revenue, but capacity remains tight despite aggressive expansion. Monthly CoWoS production capacity is projected to increase from about 36,000 wafers currently to between 65,000 and 75,000 by end 2025, and further to around 100,000 to 130,000 wafers by the end of 2026, more than tripling over 2 years. This technology enables integration of high-bandwidth memory with AI accelerators, powering next-gen data center GPUs from NVIDIA, AMD, and custom ASICs. No competitor currently matches TSMC's CoO scale, granting them strong pricing power. The combination of process tech and packaging forms a vertically integrated offering, locking in AI chip customers and fueling long-term revenue growth. Risks to consider. While TSM stock looks compelling, we should be mindful of potential risks. 1. Geopolitical risks. Taiwan's ongoing geopolitical tensions with China present significant risks to Taiwan Semiconductor's operations and supply chain. The increasing military presence and strategic maneuvers by China heighten the potential for disruptions in manufacturing and access to markets. Any escalation or conflict could severely impact TSMC's production capabilities and export routes, posing a major threat to its business continuity and global supply chain stability. Vigilant monitoring and preparedness remain essential. 2. Supply chain and operational risks. Managing Taiwan Semiconductor's complex global supply chain while maintaining consistent product quality and operational efficiency is a major challenge. The supply chain's complexity spans numerous countries and includes critical components sourced worldwide. Disruptions such as geopolitical tensions, logistic delays, or material shortages can severely impact production schedules and profitability. Efficient logistics management, real-time tracking, and rapid response to supply chain issues are vital for maintaining smooth operations and competitive advantage in the volatile semiconductor market. 3. Regulatory and trade risks. Changes in trade policies, export restrictions, and environmental regulations present significant risks to Taiwan Semiconductor's operations. Shifts in tariffs and export controls, particularly amid U.S.-China tensions, can increase costs and limit market access. Environmental compliance requires ongoing investments, potentially affecting operational efficiency. These evolving regulatory landscapes create uncertainty for TSMC's financial performance, necessitating strategic adjustments to mitigate impacts on production, costs, and global competitiveness. Conclusion. TSMC continues to demonstrate exceptional growth, profitability, and resilience, supported by strong financial results, leading-edge technology, and solid market demand across AI, HPC, and advanced chip manufacturing. Despite global risks and cyclical challenges, TSMC's consistent performance, high margins, and dominant market position make it a compelling long-term investment. With analysts projecting double-digit earnings growth and substantial upside potential, TSMC remains a high-quality stock, offering both innovation leadership and sustainable value for investors. But remember, this is not a financial advice. What do you think about Taiwan Semiconductor? Are you buying, holding, or passing? Drop your thoughts in the comments below. If you found this video helpful, please make sure to like, subscribe, and hit the bell so you don't miss my next stock analysis. Thanks for watching, and see you in the next one.